So I'm extremely happy to Naomi Fink. Many of you know her. She's an economist. She worked for several leading financial institutions and is going to enlighten us on Abenomics and the Japanese wealth gap. So the floor is yours.
Thank you very much, Robert, and to everybody for coming tonight. I initially did this work on Abenomics after a journalist asked me to assess Abenomics in a comparative context, looking specifically at whether Abenomics and the Japanese wealth gap under Abenomics might mirror what happened to the US in the 1980s under Reagan and thereafter. Very briefly, my view is no, and I guess I'll spend the rest of the presentation explaining why not. To begin with, let's start with the Japanese wealth gap, and tie this together with the state of the economy today. So at the moment, we have recovery, deflation in asset markets, and as asset markets recover, the prices of select everyday goods are starting to rise, and consumers have started to feel the pinch. Some have voiced concern that the pattern heralds increasing inequality between investors and wage earners. This may very well be a valid concern, but it is far premature to blame Abenomics for this gap. In fact, the gap between the richest 10% cohort of Japanese and the poorest 10% has been on a widening trend for years, since the 1980s. But this widening wealth gap has taken a very different form to, for instance, the wealth gap in the United States. In the United States, the wealth gap is widening from both sides. The rich are getting richer as the poor get poorer, whereas in Japan, it has been widening from the bottom only. The rich are getting no richer while the poor are still getting poorer. Now, why is that in Japan? The wealth gap really tells a tale of insufficient aggregate demand and deflation. Capitalists are becoming risk averse and doing their utmost to preserve principal rather than take new risk and deploy capital to new investments. Then on the wage earner side, we have deflation in real income, eroding purchasing power of wage earners. On top of that, you have the regressive effects of deflation on existing tax brackets. For instance, pensioners for whom deflation adjustments have only recently been made have basically been able to increase their real income as deflation progressed, while wage earners were subject to both nominal and real wage deflation. So by doing nothing in that instance for many years, the government actually contributed through their policy to a widening wealth gap. OECD statistics also show us that redistribution in Japan is lower than the average. I guess we can hazard a guess at why redistribution is lower than average in Japan. The indebtedness of the government tells us a story of very limited maneuver on the fiscal front. So then this also breeds expectations for limited future transfers, which also form part of expectations of future income, especially for wage earners, and it compounds the deflationary economy. Now, in this context, when we actually see assets start to lead reflation in prices, and then potentially wages, although that hasn't happened yet, what is an effective policy? Well, first of all, I would hazard a guess that an effective policy is not to entreaty firms to raise wages. This is at least in very general terms, this is a capitalist economy, and wages rise on their own as profits recover. But instead, what an effective policy would be would center around making sure that those conditions for future wage rises remain in place. And that really forms one of the cores of my arguments surrounding Abenomics, and that is that everything is dependent on the first arrow of Abenomics. Everything is dependent on reflation. If reflation doesn't happen, fiscal reform doesn't happen, and structural reform certainly doesn't happen. If we have an external shock before the tax hike is scheduled to happen next year, the tax hike very well might not happen. Of course, this is a low probability event. I think the market mostly agrees. So then the tax hike will most likely happen. Just addressing some of the causes of deflation and the composition of this deflationary economy, the risk aversion amongst capitalists and dwindling wages for working households, and an ever growing debt burden for governments and widening wealth gaps amongst consumer cohorts. We can see that in the presence of deflation, neither is fiscal reform nor structural reform palatable for consumers, nor credible for the government. For consumers, they just view consumption tax as an additional thing they're going to have to pay in an environment of dwindling wages. For the government, while we already see the consumers not expecting very much in terms of future income, including government transfers and redistribution, so then that only compounds the deleterious effects of deflation on the economy. So then we reverse that and then and take a look at what might happen in a reflationary context. What we saw in the Koizumi administration around 2005, we had a sudden boost, to tax revenues. Why did this happen? It's because a lot of firms that were previously unprofitable went from paying 0 to 40% tax. And almost overnight, the government was closer to primary balance than it had been at the beginning of the recovery cycle. I mean, this is a very palpable example of how reflation helps the government's accounts and thus gives room for greater fiscal maneuver. If we take a look at the consumption tax hike in particular, we know that the government has a dual mandate to not only spur growth, but then also to espouse greater fiscal responsibility. The theory dictates that you should tax the least elastic goods, as this is the most viable, dependable source of revenue. So by the consumption tax hike, this happens. If you look at the outlook for the economy amongst most market economists, they foresee a rebound in consumption only dependent on greater, at least temporary spending from a fiscal point of view. And if this does indeed take place, the reflation, the consumption tax hike, boosting the credibility of Abe's fiscal reform, and then the greater transfers in order to allay the impact of the hike, then we've achieved most of the first arrow, reflation, and then we're actually well into the second arrow, which is fiscal reform. And then that environment where consumers are earning more, investors are earning more, and the government is much closer to primary balance, is one that's prime for structural reform. There will be the government will be making a lot less people unhappy, undergoing structural reform in a reflationary context. Now from a monetary and fiscal point of view, how likely is this scenario? Well, I have to confess, good luck is probably a big part, not only good policy. Good luck is probably a big part of this optimistic scenario of reflation. We have to have a scenario where we're not derailed by another European crisis, for instance. China can't slow too markedly. we have to have a Fed that supplies just enough, but not excessive accommodation, withdraws it at the right time, at the right pace. It seems as though many actually see this, all of these, the probability of all of these things converging as relatively high. And I would like to be cautiously optimistic myself. This poses a dilemma for the BOJ. Now, recently, the BOJ has been perceived as much more aggressive under Kuroda than Shirakawa. And in the management of expectations, that might well be the case. However, the asymmetric risks that await the BOJ if they get into a real inflationary context are still the same. No central bank really wants to lose control of inflation expectations to the upside because it's much more unruly and volatile than deflation expectations. And this is kind of a tried and tested result in much academic research. So I think central banks at least believe in this asymmetry of inflation expectations. Now, perhaps this is why not many people actually believe in the 2% target for the Bank of Japan being achieved, even though they do, generally speaking, seem to believe in the potential for asset reflation. So then we add another uncertainty to this whole outlook. Can the BOJ retain its credibility without monetizing debt or giving rise to the expectation it will monetize debt, yet supplying enough liquidity to reflate the economy and make fiscal reform possible and thus make structural reform possible? So then we have this mix of policy dependencies and good luck. So then now I think you've basically got an idea of my entire argument. So now I have hopefully far too many slides to cover in this presentation. So I think I'll just use some to illustrate some of the points I've already made. And I will start with the wealth gap. On the left-hand side here, we see a representation of the Japanese wealth gap. The top line is the bottom 10% cohort gap with the median. And the bottom line here is the top 10% cohort gap with the median. So as we can see, the wealth gap on the upside has remained more or less unchanged since 2000, while the low-income earners have been getting increasingly poorer. So this is in part the wages of inflation. On top of that, we see a transgenerational wealth gap occurring. And on the right-hand side, I have a chart that shows the median disposable income, the light red bars there, and the median disposable income of ages 65 and up. And as you see, the gap between 65 and up and the overall median has been growing in deflationary years. And this is probably what I mentioned before. The deflation adjustment to pensions has only recently been put in place, while wage earners have been subject to deflation from day one. How does this compare with the rest of the OECD? Well, I've put arrows here where Japan is. I guess on the left-hand side it hasn't shown up. When I said Japan is still in the disability spreading minority, I look at the way that the wealth gap has grown from the bottom, and then the way that aggregate demand has declined, and the fact that aggregate demand declines in economic terms is a measure of lack of utility. So when I talk about spreading the disutility, then it means that as the aggregate declines, then one cohort, or one substantially large cohort, is left worse off, which is what you don't want from a policy perspective. And then looking at the transgenerational gap, it looks like our transgenerational gap is growing across many OECD countries, so Japan isn't alone in this regard, although it might have been one of the first to experience this divide. So just going back to Abenomics, as in order to contextualize all of this. Now, you know more or less where I stand on Abenomics, and I've explained I've looked at the wealth gap separately, and explained why aggregate demand is important, not only relative demand, since we don't want to study this utility. So now what I'd like to cover is how we actually establish a framework for assessing Abenomics in the first place. At least in my opinion, it's very early days to assess Abenomics as a policy, since not very much of it has materialized, and we don't actually know whether Abe will last long enough for it to materialize. This is one way in which comparing with the Reagan and Thatcher regimes might come in handy. So what I'm going to present now is a stylized account. It's a model that certainly isn't exhaustive in all its possibilities, but it's one way we can assess comparative policies relatively easily, even ones that haven't 100% taken shape yet. So first of all, we've established that in Abenomics' early days, the expectations, at least on the reflation front, are riding relatively high. Whatever Abe's approval rating, we can look at what's gone on in stocks, and we can look at some of the commentary around why this rebound in stocks has taken place, and a lot of it has been ascribed to Abenomics, rightly or wrongly. So then the next question to ask is, what are the chances that the public is actually going to be disappointed that Abenomics is not some sort of reflationary panacea? And then this is very important to precisely to assessing the potential for Abe's policies and his future credibility. This is what I'm going to spend a lot of time explaining how we might be able to estimate this. And then we have a completely separate question. Aside from the public's expectations, then there are implications for the conduct of policy. Well, actually, yes, given the expectations. As an input, and then on top of this, we need to also look at not only aggregate welfare as a policy outcome. So what we want to do is what any policy strives to do should be to maximize the aggregate welfare, but then we also have relative welfare as a variable. So I've kind of started putting the pieces in place, but then I'd like to take one step back and then just ask what we can expect from public policy as a whole, any public policy, and then this has to do with the framework I'm using to assess the public policy. We're assuming that elected policymakers attempt to maximize the welfare of the electorate, or at least minimize the loss. If only for the purposes of remaining in office. On top of maximizing that aggregate welfare, then most OECD governments have some sort of redistribution rule in place. This might be Social Security, this might be unemployment insurance, like some sort of transfer program that redistributes wealth. So what you're aiming at with devising such a redistribution rule is one that leaves nobody worse off, and this is where the aggregate demand comes in. You can't leave nobody worse off in a situation where aggregate demand is declining, but in a situation where aggregate demand is rising, you can redistribute, leaving nobody worse off. Now taking all of these things and actually setting up a policy problem. We have governments that make policy promises to minimize welfare losses and then stay in office. And then once those promises are made, then the public develops a set of expectations. And then we have different ways in which the public's expectations and the government's actions might turn. For instance, the government will probably at some point experience temptation to deviate from their promised policy in order to obtain what might be at that particular moment in time a more optimal result, which would constitute abandonment of commitments. So then we shift to the public side of this problem. If the public actually perceives that this temptation is greater than the political cost of breaking the promises, then they shift their own expectations such that that policy becomes even less effective in boosting welfare. And in this I call enforcement. So policy with commitment is much more likely when the enforcement, the potential loss of the government deviating from their promises outweighs temptation. And then this, while this policy problem is relatively standard and simple, we can stop here if we lived in a world without uncertainty. Because everyone has perfect foresight, and you know exactly what the government should do and the outcomes if the government does what it should do, and if it deviates. But unfortunately, we don't live in that type of world. So then this is where the government has to manage expectations, taking into account uncertainty. So we have to come up with a distribution of probabilities of possible outcomes. End outcomes in order to assess policy today. Here are some sources of potential uncertainty. Economic cycles. We don't really know when cycles peak or trough in advance. We know that they do, but certain assumptions that are, and policies that are enacted with the assumption that a cycle will peak or trough at a certain time might be wrong. We have externalities, and by externalities I mean things that don't involve the government's policy commitments or the public's expectations, and these include things like natural disasters, geopolitical risk, economic crises, overseas investment flows and foreign exchange, and information asymmetries like the one that I mentioned concerning the BOJ, that inflation tends to get, inflation expectations may get a lot more disorderly than deflation expectations. So now taking all of that and putting it in the context of Abenomics, now we can see more or less what we need to do in this approach. We need to find a set of potential outcomes and assign them probabilities, and then with those probabilities, we can, given that those the outcomes include both aggregate and relative wealth, then we can come up with parameters like the ones that I discussed: temptation, enforcement, and what commitment actually means for Abenomics, and that degree of commitment is going to determine the credibility of Abe's policies. So far, parameter number one, expectations, and this is public expectations. So far, it looks like the public is rating Abe's reflation credentials relatively well, although ignoring most of the rest of his policies, or at least assigning them not as high credibility. And then we have a situation where the high rating of his reflationary credentials might actually suffer disappointments, and then that could result in an eventual change in the Abe regime. Now, I would like to compare and contrast this with Reagan and Thatcher's administrations, which I think are substantially different, and then just perhaps use what we know as the outcomes as information on how to formulate that distribution of potential outcomes and then assess Abenomics. So commitment under Reagan and Thatcher, whatever one's assessment of their actual policies might be, was relatively strong. Now the policies themselves comprise things like a commitment to monetarist policies and pressure for central banks, uniform pressure for central banks to combat inflation. I mean, in Thatcher's case, rejection of Keynesian policy specifically. In Reagan's case, we had emphasis on capital tax cuts, so it was mostly fiscal reform rather than structural reform. For Thatcher, it was structural reform. Now, I argue that that for Reagan and Thatcher, were comparatively very, very lucky. And what do I mean by they were very lucky? Well, from a government's point of view, the ideal situation you want to be in is one where you start off with a wealthy government. You have high inflation that you haven't given rise to yourself, otherwise it's very inconsistent, and you spend your entire administration bringing inflation lower and cutting taxes. Which is precisely the situation that Reagan was in. Is Abe in the situation? Well, no, we're in a deflationary scenario, and you're in a situation where the BOJ has to give rise to inflation, and if the BOJ gives rise to great inflation, then it's a humongously time inconsistent policy. So here is one big difference between the Reagan and Thatcher administrations and Abe, and as such, if we look at the actual outcomes of the Reagan and Thatcher administrations, their perceived commitment was very high, which meant that temptation was less than enforcement. Now, what does that actually mean? Well, that means that the government's loss function from deviating from its promises was less than the enforcement, the cost of the public losing faith in their policies. And the cost, as we know, of deviating in those days was very high inflation. Thus it was great. In Abe's case, the cost of deviating may be growing with reflation, but it certainly isn't as high as it was for Reagan and Thatcher. So that is one risk point to look at. Then we have the retrospective evaluations of the Reagan and Thatcher administrations. We can see that commitment or credibility in public policy was very high because the economic growth that ensued over the latter parts of the administrations, even thereafter, are many times attributed to the policies of those times. I mean, so is the widening wealth gap. But it seems as though the growth itself and taming of inflation is really attributed to the fiscal and monetary policies, and in Thatcher's case, structural reform policies of those times. So we had great commitment here. I mean, this includes Volcker's Fed, who's seen by many as responsible for bringing the great moderation, the decline in inflation into the picture in the U.S. and most likely overruling the much less aggressive Bank of England at the time, with whom Margaret Thatcher had substantial disputes. So then, after knowing all of this, what we, in order to compare the policies, we formulate some lower probability events. Now we know the probability of these events are zero because they didn't happen. But then we can assign probabilities for them as if they were minor probabilities for them, as if we were still in that position, and then back solve from what we know actually happened. So we have scenarios like continued stagflation, that the Volcker Fed loses credibility. That feeds into the loss function of the government. We know that the loss function was very high. We have Reagan's tax cuts and the credibility that he had amongst capitalists, when there still was at least some probability, a low probability, perhaps, that his corporate tax cuts would not be credible. And let's not forget that Reagan actually did also hike taxes 11 times. And the potential cost of this could have been a perceived welfare loss, and then a risk of lost credibility of the Reagan administration. We have Thatcher had problems with the UK budget and the levels of debt. The UK had to go to the IMF at this point. She had to put in place a tax hike at a very inopportune time, instead of cutting spending. Yet she managed to retain credibility. Would this have happened if we didn't have an aggressive inflation-fighting Fed, or just generally inflation coming lower? That's debatable. We had Reagan raising the debt ceiling 18 times. Now, would that be possible today? Well, we know that it's much more difficult to raise the debt ceiling today, but we have a much larger debt at the moment, and we need to remember the relationship between inflation and debt there as well. Inflation enriches the government by helping them inflate away existing debt balances, and that's one thing that we know Abe doesn't have. So then how do we apply this approach to Abenomics, and look at the potential outcomes? Well, first we want to look at the potential policy outcomes, and we have the good scenario that I explained. We have inflation in asset markets, and that spills over to prices, and that spills over to wages, and then fiscal reform becomes a lot more credible, and then structural reform becomes possible. We have, for instance, a bad scenario in which the rally in global markets proves ephemeral, and then Japan returns to a deflationary path, but we might eventually be helped out by reflation in asset markets abroad. So that's a bad policy outcome. It's a loss of credibility, but it's not hyperinflation. Then we have the ugly scenario, which I have to point out is a very low probability scenario, and that's one where inflation actually does get out of control, and that does impose quite a lot of pressure on the outstanding Japanese debt, and then it leads potentially to capital flight, etc. Very low probability event. Now we have those. We can look at what each of those mean for the welfare gap. And since we don't also live in an environment of no uncertainty, there are various ways the welfare gap could go depending on the policy outcome too. I mean, we can have a good scenario where we have reflation, etc., and then that actually makes the tax brackets a bit more progressive. It allows for eventual transfers to redistribute wealth, and everyone's better off. We have a good-bad scenario where we have modest inflation, but tax revenues don't recover enough to sufficiently redistribute income such that the welfare gap does not rise. Then we have a bad-good scenario where we go back into deflation, and this is what I mentioned earlier, but we're helped out by events abroad, a continued deflationary economy in the U.S. and good policy from the Fed. Then we have a bad scenario where all of that fails. We have an ugly bad scenario where the BOJ loses control of inflation, but not enough to severely damage the economy. And we're helped out by better events abroad, and then we have an ugly scenario where it's that very low probability tail event of inflation getting out of control and prompting capital flight. And then what we have to do is assign probabilities to each, and then and solve this problem backward. And what that will give you, given all of the other factors that I just described, is a parameterization of the loss function of temptation. It gives you a quantitative assessment of temptation. It gives you the quantitative assessment of enforcement, and it tells you how much Abe is going to have to work to maintain his credibility, given that I would imagine the temptation outweighing enforcement might not be as great a margin, by as great a margin as under Reagan and Thatcher, where the threat of inflation was really looming. So then once we get this evaluation, what do we actually do with it? Well, firstly, as I mentioned earlier on the reflation front, policy is really path dependent. So we're dependent on the BOJ's policy as well as a lot of good luck in order to implement any of the other policies at all. So then on the fiscal policy front, we need reflation first and foremost, and then we need that reflation to inflate away some existing debt balances and offer higher tax receipts for the government. And only at that point can the government recover fiscal credibility. Now the question is, well, is this optimal? It's not necessarily optimal because we run the risk of jeopardizing the BOJ's own credibility. This is why the BOJ is telling us we're not monetizing debt. This is exactly why. On the monetary policy front, well, I guess we've gained a lot more credibility since asset markets have made a comeback, and so we might get an optimal outcome. But then we know that there's this asymmetric risk of inflation surging out of control that actually keeps the BOJ's own behavior in check. So then we have, at one point, the government and the BOJ still at odds because the BOJ will, the last thing it wants to do is monetize debt, even though in action it pretty much is doing that to some degree by buying government bonds. And then finally, structural reform. We're dependent on the first two, on reflation and then and fiscal reform for structural reform in the first place. What can structural reform entail? Well, I guess we can come back to what structural reform was under the Koizumi administration, which was, largely centered around postal reform, for instance. Plans for postal privatization they still exist, but we know that they're a lot more for collecting revenue rather than enacting true reform. Apart from that, we have TPP and potential trade liberalization as one avenue to bolster productivity, and then we have some discussion of labor reform. Well, is it optimal? It's far too early to tell right now, and it's far too path dependent. Once we get past reflation and once we get past the consumption tax hike, assuming that it's possible to enact it, then a lot of the structural reform questions will make a much greater, they should be able to make a comeback. So I will, in the rest of the presentation, I've included some discussion of my own more academic work on a breakdown of Japanese total factor productivity. Yes, I think I might leave this for another time or for individual discussion, given that I've mostly covered the theme.
Good. Thank you so much. Thank you to a very dynamic crowd. So ask questions, and if you want to take the questions yourself and want me to take the questions. So raise your hand, and Travis or Nico will give you the mic. So if you have a question, okay. And if you can identify yourself, Naomi, who you are.
Okay. Thank you very much for your presentation. It was very interesting, I think. There was a lot of things. Oh, sorry. My name is Kyle Ham. I work in publishing, which is not related to economics necessarily, but I did find that the content of this presentation very interesting. One of the things that you mentioned was that, of course, making sort of predictions about how Abenomics is going to affect other parts of the Japanese economy. And you mentioned that there are some uncertainties, for example, the economic cycles or geopolitical risk, overseas investment, things like that. And one of the things you mentioned was natural disasters. Of course, in Japan there was the earthquake which happened just a few years ago, and that's had a big effect on energy in Japan. And it seems like now that Japan is moving away from one of its most common resources of energy, which was nuclear, and now investing a lot in overseas oil. And I'm wondering how that investment is going to have an effect on, as you see, an effect on possible inflationary or deflationary policies in Japan.
Well, the resources question is indeed an important one. And it has an interesting interplay with monetary and foreign exchange policy. For instance, we've had the yen's weakness help exporters, but it's made the importation of oil a lot more expensive. So probably strategic investment abroad in oil or natural gas, or even domestically in renewable energy, etc. I mean, that's something that over time should allay some of that uncertainty from a shock from surging prices, either because of the oil prices themselves or foreign exchange. But I think it's the investments will probably take quite a lot of time to bear significant fruit. And when assessing Abenomics, it's very hard to assign the potential for allaying this risk in the context of one administration. Since, I mean, even if we were to take the most optimistic assessment of Abe's administration, it's hard to see it lasting long enough to see a lot of these investments bearing fruit.
I could belt it out just the same.
Here's a microphone for you.
Okay, my name is Krusko Hewitt. I'm a financial risk analyst for a major global energy company. And kind of more specific on that last question, if we're running a trade deficit, and this is sending up inflation, largely food and energy, that doesn't give you wage inflation, and without wage inflation, you're not going to get any consumption need. Isn't this really, I mean, isn't the yen policy specifically a disaster for the country? Isn't it running a huge risk?
Well, that is an excellent point. Without wage inflation, eventual wage inflation, we probably won't have true reflation expectations. And we can't call reflation a success. And as a result, we probably won't get to the BOJ's 2% target. Well, I mean, we're less likely to get to the BOJ's 2% target because then what consumers will just do is consume less. Yes, I think in a way, then the yen policy is not necessarily helping the real wages recover. But then on the other side of that, real wages usually wages are a little bit stickier many times, I think especially in Japan, than prices. So you would expect them to recover with a lag. If we see companies becoming massively profitable and you know, not raising wages or bonuses by next year, for instance, yes, we should really start to worry, because it's time to ask, well, what do the companies know that the rest of us don't, and why are we investing in them?
All right. My name is Rocky Nishino, a business owner. Thank you very much for your presentation. This question is really from my curiosity, out of my curiosity, and from your standpoint of view, from your viewpoint, I'll ask a question about the consumption tax.
Yes.
What percentage is adequate or ideal for consumption tax, both in long term and short term. I think what your personal opinion?
Well, first I will start with the IMF's opinion. Because, well, it's a good starting point. Their opinion is that 10% or even 15% is probably too low. And if we compare goods and services tax or value-added tax with other OECD economies, then 5% is excessively low, and even 10 and 15% is relatively low since they've been rising, especially in Europe. The question of what is an ideal level of consumption tax or tax at all has been one that economists have been struggling for a long time. I mean, in the 1980s, the Laffer curve was popularized, but even the Laffer curve assumes that there are 2 points, except for the optimum, at which you can achieve the same result by taxing too much or taxing too little. And also, in order to actually generate a Laffer curve, you have to, you can only really solve it numerically, because it means you have to solve a whole system of equations with more equations than variables. So I guess the intuitive answer is, well, it's far too low, and it should be closer. It should be somewhere above 15% if we're going to have the same outcome as other OECD economies. But then the theoretical economist, maybe slightly more annoying answer is well, it depends on many other variables, like, do you take as given a certain level of government spending? Because if you want a certain level of government spending, you're going to have to fund it somehow, and Japan is probably running out of room to issue debt in order to fund additional spending. Then you can say, well, at a certain level of government spending, and then assuming a certain amount of output, and a certain amount of consumption, then what result do we get? Well, we get a whole bunch of different results, and then so it really depends on the assumptions that we actually make.
So we are talking about the consumption tax rate, and also we know that to counter the possible negative impact caused by this tax rate, the government actually is trying to come up with a program to counter this effect, including like some subsidies programs for low-income families and things like that. So this counter program actually, I mean, the government is spending more. So the effectiveness of consumption tax rate is not as high as it is. So I just wonder, how I mean, scale-wise, how does the consumption tax increase will contribute to recover the physical capability?
Well, firstly, the consumption tax, when increased, is probably, well, we can look at it as a semi-permanent phenomenon. It's going to be increased for quite, and stay there for quite a long period of time. If we do have stimulus packages, I don't think there's an assumption that it will be there for as long. I think the stimulus packages many times will be temporary and reversible depending on whether regimes change or not. And the only context in which I guess that stimulus wouldn't disappear is if the government can afford to continue its redistribution programs. The only way it can do that is by raising money, by, well, deflation, number one. I mean, inflation is revenue for the government, although it erodes depositors' savings. It can do it through cutting spending elsewhere, or it can do it by raising tax at another point in the future. So probably if you do see some of these stimulus packages that the government claims will be permanent or semi-permanent, I guess it's time to get very wary. Then it's time to start asking, well, what else do they have to cut? Like, you know, are the defined benefits from pensions going to last forever? I mean, my guess would be no. I think at some point they're talking about making the GPIF, for instance, a risk-bearing body, and perhaps this will become more of a reality when Social Security spending becomes a larger and larger part of the general account. Yeah, I don't think it's sustainable just to simply raise spending without offsetting sources of revenue. So yeah, your point is very valid. I think that that at one point, if we do see these types of spending programs last, it means that they're going to cut spending or raise taxes elsewhere.
Okay, thank you very much. My question is, like, right now we're talking a lot about short-term impact on economics. My question is, like, for longer term, like, if we see like 10 years or 15 years later, what do you think Japan would be influenced by this kind of the new policy? Especially right now, Japan facing a lot of the population is getting old rapidly, and the whole population is shrinking, and the economy, the government have a high, like 240% of GDP tax at that, and all the big corporations have a lot of this kind of inside issues. So I'm really interested in your mind.
Well, firstly, I think most of the questions that you ask have to do with structural reform. Although, except for one, the fiscal question. Now, of course, the fiscal question, I think, is number one, dependent on how much debt the government can inflate away and a new tax revenue it can collect. So if inflation is successful, then you have an instant reduction in the overall debt unless the government outspends that reduction. On the structural front, once we get to reflation, one of the things that's really being discussed is the role of reforming labor. I have two main points about the labor reform point. Number one, the work that I've done on total factor productivity shows that we have an extremely two-speed economy in terms of productivity as well as other factor inputs. So then there's a lot of heterogeneity amongst industries. For instance, we have on the manufacturing side extremely competitive, deregulated firms that are very internationally competitive. On the services side, we have the reverse. So, I mean, my recommendation there would be when we want to formulate new policies to boost productivity and deregulate, target the ones that really need it, the services sector. I did some work on the relationship between regulation and productivity, and actually it gave the result that in the manufacturing sector, you have a positive relationship between regulation and productivity, because, I mean, how can it be? Well, it's very deregulated, and potentially new regulation might be in favor of those productivity in those industries. Whereas on the services side, it's very highly regulated, and of course it has a negative coefficient. So when we want to deregulate industry, we need to focus on the services sector, not necessarily, you know, a special economic zone for auto manufacturing. That might be misplaced. So then that's one. The other comment on productivity and labor reform is that I mean, there's been a lot of talk about getting new entrants back into the labor force, specifically women, and I think this is an argument more centered around. I think maybe this is not necessarily so much a productivity, but a labor factor of share of income, factor of production argument. So you put more entrants back into to the labor market, and then labor share of income rises, and if nothing else changes, then GDP rises. But actually, you know, productivity in Japan has been growing at an ever slower pace, but still growing since the last decade. And one of the reasons it's been growing is because labor hours have declined, which is, so then, you know, the two are in opposition. So I guess we reconcile them by saying, well, eventually wages will reflate. because there is a finite pool of skilled resources, and when wages do reflate, then you have a potential for cannibalizing corporate profits if you don't have more productive work hours. And how do you get more productive work hours? Well, you maximize the number of productive workers, which includes things like getting more women in the skilled labor force. Yeah, so that's my comment on labor productivity and then labor's share of income. And then finally, I've been, and this is, I guess, something that I've been revisiting many times, but probably things like Japan Post, they're more than symbolic. I mean, the government's balance sheet is massive, and I guess from a theoretical standpoint, not many economists look at the potential for privatizations to bear income in the future. But if you privatize and that company becomes profitable, then you're able to collect taxes on the profits and as well as on the investment and the dividends from those profits in the future, which are an infinite stream of income. And so I think that that the current plan of privatization, while it might not be offensive to many bureaucrats, or it might not be central to Abe's agenda at the moment, is still important, and it still shows a commitment from the government's point of view to reallocate capital more efficiently, which is also part of productivity. You have allocation of labor, you have allocation of capital. If you allocate that huge pool of government capital more efficiently, especially in a sector that's extremely regulated. I mean, many private financial institutions are finding it very difficult to compete with Yucho and Kampo. So you also you make that sector less regulated and more competitive too. So I would I have to say that Abe should not ignore that Koizumi's old agenda.
Hi. Naomi, thank you very much for your presentation. My name's Mike, and just getting back to the question before the last one, you mentioned that the GPIF is talking about becoming a risk-bearing entity. What exactly how do you define when it's a risk-bearing entity when presumably everything has risk?
Well, I think the panel headed by Takatoshi Ito has proposed a corporate structure for GPIF, whereas right now it's just under the Ministry of Health, Labor and Welfare. So yes, it has risk assets in the mix, but it isn't itself a corporate entity. I'm not sure whether that will really happen, but that was one of the recommendations.
Thank you.
This is the first time that I see the real voice of yours, but I was reading both your articles at the Mitsubishi UFJ, so welcome back.
Thank you.
First of all, I think after 3/11, the Japanese people, particularly at my age, I'm 66 years old, making preparatory works to cope with the ugly scenario. That is, for instance, I have one answer that we shared in common as my age people. We are too much. We are the core of the problems in Japan. Didn't work hard, almost illiteracy to IT tools, but our mates are still working in the major corporations, in the subsidized companies, and also the subsidiaries as the big titles, executive officers. So, replacing all these bad guys to the new young brilliant women is a one solution. The second one is that we are overpaid in a pension plan. I am working for my own company. I have the high revenue, but yet I am retiree from the pension fund. I receive something like 75,000 yen a month, minimum size, but I still receive. Surprisingly, my wife doesn't. She has never paid to the pension. And that can be something that we can modify. And if the crisis happens, we are prepared to put our necks to the sacrifice to the nationals or to the youth. And good news is that we are just updated about our position as a nation. because of the stimulus coming from East Asian countries. And the good news is that our defense ministry, with the agreement and strong government, putting a tremendous budgetary limit to the upper scale, to the naval forces or enhancing our F-35, whatever. So we are actually working on it. And every scenario is under our consideration. So we will be fine. And particularly the withdrawal foreign asset has hiked 40%. That's the good news. So I see no corruption of the Japanese government, as I saw in the Greek or Spanish government, and their bonds are still exchanged. That's the good news. And my latest fear is that what if Japanese yen goes to dollar 125 to 130 yen? That is the most fearful thing. What are you thinking about the scenario? Is that a possibility that you're going to take?
Well, I mean, it's been there before, but it's certainly within the realm of possibility. I think that it also ties in with what we were discussing earlier on energy costs and how now we have a scenario where we don't just gain from higher exports, but we pay more for importing fossil fuels. I certainly think that's a risk. And then on your comments about the ugly scenario, as I mentioned before, this is a very small probability tail event, so that certainly isn't my central scenario. And I think after Shirakawa left, it's not the BOJ scenario either. I share at least some of your optimism. I'm cautiously optimistic that the good luck scenario that we need to achieve everything else is relatively likely. But then I also do recognize that there are certain risk factors that can sink this scenario as well. One of them being any sudden surge in the costs of importing energy. Yes.
Michael Haas, I'm a translator, and further to your point about deregulation in Japan's services sector, how would you suggest Japan do that in such a way as to avoid or at least minimize the risk of asset bubbles, such as the sort that North America and Europe in particular have been experiencing for the past 15 years or so?
Well, there are many ways in which you can deregulate the service sector, even the financial sector. I would say that the pre-crisis U.S. Was perhaps the antithesis of the Japanese financial sector now. The Japanese financial sector labors under many years of new regulation without necessarily easing existing regulations. Like, for instance, when the financial instruments and exchange law was put into place starting, I think, in 2007, then it seemed to establish greater and greater barriers to things like speculation on foreign exchange. Now, arguably, perhaps that the speculation on foreign exchange, like individuals were leveraging 500 times over, perhaps that was somehow necessary. But then on the other side of this, they put in no alleviating measures for increasing more reasonable levels of risk-taking for foreign exchange and other products. And if we look at household balance sheets on aggregate, that foreign exchange speculation was an extremely small part of the balance sheets. So it seems like the regulation has only gone one way. For instance, when you introduce a regulation to limit the amount of leveraging that you do on foreign exchange, then perhaps it might be alternatively a good idea to try and deregulate elsewhere. Like, for instance, some of the individual investment in stock, for instance, or allowing a greater number of providers of electronic trading in other products like ETFs that the government really wants to promote and the DOJ is buying. I mean, these are just examples, but I think there are many other ways to do it than just simply see something that you think is getting out of control, introduce a pretty harsh regulation, kill that industry, and then assume that investors are just going to do something else. I mean, they do something else, they just hoard cash.
I'm an industrial consultant, sometimes helping the institutional investor through my senior friend. Deregulation of what? I want to know, do you have any figure? Suppose these are deregulated on what? How much the economy can be boosted? And the second, concerning the structural reform. What is the structural reform? I can't grasp this a concept. In my opinion, it's supposed to unify both the annual budget and the special account together. Special account for the moment amounting to 200 trillion yen, whereas the annual budget is nearly 100 trillion yen. Why don't you make it together, unify that? So that I think this is really a structural reform. What do you think?
Well, I entirely agree on your last point. I think the general account and the special accounts should be unified. One of the main outlay, well, the main outlay of the special account is transfers to regional economies. So sure, that should be number one on the agenda. But is it likely to happen? Well, I mean, there's disproportionate political representation in a lot of regional Japan, which has very different economic structure than a lot of the cities. So, I mean, it should happen, but is it likely to happen? I just think it's much less likely to happen than other quick wins. When you talk about, when you asked about regulation, now the data that I used in my own, I'm not really sure this will be very easy to look at, but I mean it's a panel regression that I did with regulation as two measures of regulation as regressors, the data that I got here was actually available from the Cabinet Office. There's some really excellent data on industry level. Almost anything, production, total factor productivity, investment, intangible investment from the JIP database that's compiled by Totsubashi University, Cabinet Office in Rieti. So this is where I got these indices. And what are they? They're just basically an aggregate index of either industry-wide or partial. That's Reg 1 and Reg 2. One is industry-wide regulations existing, and the other one is partial regulation. And this includes every type of regulation. So it's some industry-specific labor regulation, capital regulations, regulation on construction, all type of conceivable documented regulations are supposed to be included in this index. So yes, I mean your question is a very good one, especially since I brought up heterogeneity. Regulations are not created alike. All industries are not created alike. So when you really get down into the work and look at where you can deregulate the services sector, you can't paint with a very broad brush. You have to look at the existing regulations in that sector and see how they actually are impinging upon productivity. I mean, my analysis was just at the industry level because that was the data available. But yeah, we're not exempt from the responsibility of querying why this was, and then taking a look at the least performing. I mean, I do have data on which are the least performing industries because I did breakdown of a decomposition of total factor productivity for every industry and then reaggregated them on sector lines. So I put the top 10 and the bottom 10 here. And I used this slide just to illustrate how the top 10 productive sectors are all clustered in the manufacturing and especially IT sectors. And the bottom 10 are all remarkably non-IT related. So it's not only something that we can generalize about on aggregate, it actually holds up on greater scrutiny, sector by sector. I'm sorry, could you remind me what else, what other things you asked me about, because I went off on a tangent.
Structural reform.
Structural reform and what that actually comprises. Well, structural reform probably does to some extent comprise taking a look individually, sector by sector, at these regulations and seeing what doesn't and does need to be changed. So, so then, I mean, on an industry, from an industry perspective, we can't just discuss deregulation. We have to look at industry by regulation, and then see how we can achieve greater productivity. That's one way. Another way is labor reform, and then that's more that's probably as much a legal question as an economic question. I mean, anecdotally, people have talked about how expensive it is to fire employees, while there still exists the potential for this this prohibitive cost to inhibit the hiring of full-time employees. And perhaps this might be one of the reasons why there's this massive gap between the income and security, or like the lifetime income of permanent employees versus part-time. So then that could be something from a legal perspective that's likely to be revisited. And then the GPIF question as well. I think several people have talked about the Japanese debt, and I mean, this is, I guess, a general account problem too, the Social Security payouts. I mean, can you have an infinitely rising government spending with no offsetting with no offsetting cuts elsewhere, or rising debt, or rising tax revenues? Well, no, you can't. It's just impossible. So, so at some point, something like there are some painful processes that have to be done beyond the fiscal. I mean, the fiscal is just raising the consumption tax, right? But then the structural is saying, well, how are we going to be able to handle our pension liabilities in the future? So one option is to create a greater, a corporation from the GPIF, and then actually have them take on more risk assets, so then ultimately the pensioners take on more risk. Much easier done when the economy is doing well and they're getting income from other sources. Much more difficult if the pensioners are keeping status quo and everyone else is getting poorer. So I think those are the type of things that really need to be addressed in structural reform. And then even this privatization question. I mean, I wouldn't say that Japan is. I wouldn't say that it's necessary to put the policies of Prime Minister Margaret Thatcher in the UK into force in Japan. No, it's very different, and then there's a certain threshold to what Japan will probably accept. But again, case by case, there probably is a reason to take a look at the government's massive balance sheet and see what it can get from not only privatizing, but the future revenues it might get from the more competitive bodies that it can generate from these privatizations in the future.
And the last question. Since Governor Kuroda, he was appointed last April to govern the Bank of Japan, BOJ. Then he started to buy a Japanese government bond, JGB. And he announced that within the 2 years, it's going to be 300 trillion yen, more or less. Whereas at that time, last April, it was around 130 trillion yen.
Yes.
So doubling the amount of this cash in terms of monetary policy, spread out around, circulated in the capital markets and consumer markets. But our city banks, they sold the bonds back to the BOJ, and then the BOJ gave them the cash, but this cash was still deposited in the Bank of Japan
Yeah.
in their account.
Yes, in the reserve balance.
So I like to really attack the banks. They never release cash loan to the private sector. How can you stimulate the economy? This is the hardest thing that we should really push the banks to release cash to the private sector. That's my point.
Now the thing is, Japan has tried that. They've tried forcing banks to lend before, and then forcing banks to lend when nobody believes in reflation is probably a bad idea, because it causes them to, well, it creates a moral hazard problem. Well, I mean, the government wants us to do this to stimulate the economy. In the event, we'll get bailed out, right? I mean, in the event of failure, we'll get bailed out. So that approach has not been so successful in the past. I mean, I think this is more a question of really creating reflation expectations, and then it does come back to the wages. It does come back to the consumers and their expectations, and greater consumption because of expectations of future income, and then investment in risk assets, and then greater return from risk assets, and greater appetite to bear risk. I don't think you can force banks to lend in an environment where risk appetite everywhere else in the economy is insufficient. It's the real economy that has to drive it first, and then the banks will lend when there's demand for lending.
Any other question? It's a very quiet group. I have one question, which is started with the issue of equality in the wealth gap. In many countries, it's become a major political issue. In Japan, it hasn't. Is it because, quote unquote, only the poor have been getting poorer and the rich have been getting richer? Is it because it's covered differently by the media? Is it because it's less acute than in most other advanced economies?
Well, in Japan, the wealth gap is very close to the OECD average at the moment. So I guess it can be considered less acute than for instance, the U.S. And then even in and then I guess if we take a look at aggregate demand or aggregate wealth, Japan is still a wealthy country. So even if you have the poor suffering more, then it's not a great enough impetus for people to be up in arms and foment revolution, as they might do in a country that's aggregately less wealthy. And lastly, I think that the question of redistribution. I mean, redistribution in Japan is relatively low compared to the OECD average, but then I think that has to do with expectations on the fiscal front. If you don't think that the government can afford to pay you transfers, then you don't want them to do that as a political gesture because you don't believe that they'll last anyway. So I think that's a bit deflationary too, because then you end up hoarding cash because you don't think that the government or your job is capable of increasing your income in the future. So you just want to preserve the wealth you have. So I think perhaps it's that type of reactive saving as well. There's about 800 trillion yen in cash savings on the household balance sheet. That's greater than Japanese GDP, and it's half the household balance sheet. Yeah.
I have just one last question. That there is a definition needed me to understand when you talk about the high income earnings for rich means what? In this country, rich, in my understanding, is the corporation, Tokyo Stock Exchange listed corporation executives. They are earning 100 million yen, but they've been attacked by the media. So I understand that's a kind of maximum size. In the average, rich means in the average citizen like myself, 100,000 yen is a big money to dream about. So I think Japan is something different from that perspective. OECD data doesn't apply to Japan, I'm afraid.
Well, OECD data doesn't use absolutes. They use cohorts with respect to the median.
Oh, I see.
So yes, it doesn't compare dollar for dollar, yen for yen. It's just you look at the top 10% cohort versus the median versus the bottom.
I have a somewhat more simple question. The TPP issue that's coming up, which I see as being a very interesting contradiction of various factors in Japan trying to sort out how to deal with the rest of the world. My own thought is that Abe is going to basically knife his rural backers and knife them and pass the TPP because the industrial sector in Japan needs the TPP, and that's much more important than, say, agriculture or fisheries or whatever. First of all, do you think the TPP, Japan will join the TPP in some form or other? And if they do, what are the economic implications of Japan participating in the TPP?
Well, the gains from trade and the impact on productivity has long been studied as usually a positive relationship. So long as, I guess, you have a sector that is relatively closed, and I guess that's not necessarily manufacturing because a lot of electronics and autos it's already relatively open. Then there probably are areas in which one can gain from trade and raise productivity. Usually, exporter firms are on the frontier of technology. In any country, so then that could explain why a lot of times opening one's barriers to trade can boost productivity. I mean, also there's the classical comparative advantage argument that we all like about doing our math, which also holds in this scenario. So overall, on aggregate, I guess there's a significant argument to look at gains from trade, but there are obviously other considerations than the immediate technological productivity benefits and even income. Like for instance, I mean in agriculture and pharmaceuticals, here we have kind of an interlinkage between the gains from trade and safety regulation. Japan has long been opposed to importing cheap pharmaceuticals from the U.S. notably because there's a massive lobby there. As the pharmaceuticals industry in Japan works very differently. You introduce a new drug and then it basically has a schedule to when it goes generic, which is very different than what happens in the U.S. You don't have this schedule you don't have this pressure to continuously innovate because you have a schedule of increase, these dwindling profits. I can't see that disappearing anytime soon. TPP or no TPP, this is something that could be classified as a national interest, and probably you have safety regulations. So I doubt that there will be as much liberalization on anything that one can deem national interest. But I mean I would not only apply that to Japan. I think that's probably the case amongst most countries, most potential participants.
So earlier you talked a lot about expectations, and I wonder, how long we can wait. I mean, the expectations can wait. So I mean, if we take a look at the stock market, definitely the first arrow of the QE has reached its goal, and if we look at the stock market performance, actually, the investors see profitability and also growth. So the inflation actually increased the revenue side of the profitability. So we see now the stock market is really at its high. But so the next, since the yen is not going to depreciate anymore from now, so I think the corporates, the next stage for them is really to see cost reduction in order to achieve the profitability growth. Because I mean, the revenue side is pretty much fixed going forward. And so I just wonder, you know, how long do you think, you know, the investors' expectations can wait before they see the result from the structural reforms? Because I mean, when we talk about structural reforms, they are pretty much comes from two things, right? Labor mobility from labor term, or the like capital expenditure from the capital investment term. All these two things takes time to see a result. So I just wonder, in your opinion, when the stock market will start to fall, because the expectation cannot wait for any longer.
Well, yes, you make a good point. We have schedules for the first arrow, the inflation by the 2% by 2015. That's something that the BOJ has stipulated, and then we have the consumption tax hike next year, which is which will, if implemented, and I think most believe it will be implemented, is one coup for the fiscal front, although it's certainly not the end of fiscal policy. On credibility of structural reform, I think it is really an issue of, can Abe implement any of this while he's still in office? So it's a race between, you know, Abe's tenure and the ability to implement structural reform, because even massively popular Koizumi, who inherited, or who was very lucky in terms of economic backdrop, wasn't able to implement his signature reform. So yes, I really think that that the way that we can assess the reform credibility is whether the public believes that that Abe will last long enough to even implement those things. As far as the results of those reforms go, yeah, I doubt we're actually going to be able to assess those in Abe's tenure at all. As you said, the structural reforms themselves don't only take long, but the seeing results from those structural reforms take a long time too. So this will only be assessed in retrospect. But that was also the case with Reagan and Thatcher as well. In retrospect, we've said, oh well, in the latter half of their regimes, then GDP rose, inflation fell, and it continued rising, you know, as a result of Thatcher's reforms. I mean, do we know for a fact that it's as a result of Thatcher's reforms? No, we don't even know for a fact that the Fed's aggressive actions was what caused the Great Moderation. There's even debate about that. But the expectations component matters a lot in the ability to implement those things in the first place. So yeah, for structural reform, it's definitely a race between Abe's tenure and then his ability to implement those things at all.
Well, thank you very much. Just one very short question, very short answer, because we have 1 minute left.
Yes, Naomi, it's Tom Dree, so I'm general counsel here. This is a very, very difficult, you know, issue or question. But one thing we haven't addressed at all is just the public choice, you know, question of does Abe or the LDP or the people who support him actually have any real interest in structural reform? You know, if you look at where job growth is created, it's from SMEs. It's not from the big companies that have been benefiting.
Okay, I'm going to give you a very typical annoying economist answer. It matters much more whether we think that Abe has commitment to these policies than whether he has it at all. And whether we think he has commitment to those policies is going to be dependent on his ability to implement them, which is dependent on reflation, which is dependent on fiscal reform. I mean, if we actually think that every politician is fully aware of the policies, let alone the consequences of their policies, well, that's not very realistic.
Thank you so much.